This teaching is going to be on intraday trading live trade experience. Okay, so I've decided to be creating uh, a series on live trades on every trading day. That is after trading for the day. I'm going to do a video on the I'm going to do a breakdown video. Okay, so I'm going to share with us what I actually did throughout the day. Okay, so and that's going to be one of the series that we are going to be working on from now henceforth. Okay, so it's not going to be like weekend videos only. Okay, it's going to be more or less like each day that I'm going to be trading, I'm going to be sharing the breakdown of the trade I took. Okay, so before we get started, if this is your first time of coming across this channel, please subscribe. Okay, subscribe to this channel, turn on the notification bell, and you know so you can join and receive notification whenever we upload our weekly content. Okay, so now I've decided that once we get to 500 subscribers, I'm actually going to give a room for live trade. Okay, in other words, we are going to be hosting on here live trades. That is, I'm going to be sharing my screen with us online. Okay, so but that will be once we get to 500 subscribers. Okay, so I want to appreciate each and every one of us that has taken out their time to subscribe, and the comments that already that's left, those that took out their time to comment on the videos as well. Okay, I want to appreciate every one of us. Okay, so this series are actually going to be on live trades. Okay, they are going to be on live trades, and so let's get down to today's business. Okay, intraday day trading live trade experience. Okay, so now this is actually today's price action. Okay, on the Australian USD. This is the intraday chart. Okay, the 15-minute chart, right? So this was uh what I traded today. Okay, this was the price action that I traded today. Okay, so and this uh is the money section. Okay, this is actually the money section uh part of it. Okay, so I only trade, most of the time I only trade the morning section. Okay, I don't trade the afternoon section. I only take the morning section and I'm done for the day. Okay, so I'm going to share the breakdown of what I did today, um of what I did today. Okay, so now as you can see, this is between midnight to 12, okay, 12 noon. That's the New York lunch hour. Okay, this is the New York lunch hour, and as you can see, at the time of making this video, we are already in the New York that's the afternoon session. Okay, but I'm no longer interested in trading again. Okay, so I only took what I have from the morning session and I was done for the day. Okay, so now I'm going to share the breakdown with us of what I actually did today. Okay, so what we are going to be doing, using the benefit of hindsight, but we are going to be looking at it. I'm going to share the breakdown with us. Okay, using benefit of hindsight. Okay, this is not a back test. Okay, this is not like something that happened several weeks ago. This is actually something that happened today. Okay, so this is the breakdown of the trade I took today. Okay, so let's get down to it. Now, before we go deep, I want to share with us something. Okay, now this is today's price action. Okay, this is today's price actions. You can see the black horizontal line delineating the 12 midnight to the New York lunch hour 12 noon. Okay, so now but you can see that I calibrated my fib to previous to the last previous 2 days. Okay, to the last previous 2 days. So I actually saw this. Okay, when I saw this, I was like, okay, I saw price reacting off an old fair value gap. Okay, so this was one move, right? This was one move down, and remember our bias is still bearish. Okay, our bias is still bearish on Aussie dollar, and price has just reacted off from a 15 minutes uh fair value gap. Okay, so this is actually IPTA. Okay, this is IPTA, interbank price delivering algorithm, which we seek for liquidity in the last 20 days, 40 days and 60 days. Okay, so ICT mentorship for this year didn't actually cover the interbank price delivery algorithm. Okay, so I learned this from one of his old videos. Okay, so the interbank price delivery algorithm will actually seek liquidity resting above old highs in the last 20 days, 40 days and 60 days. Okay, there's a way we calibrate it. We calibrate the we cast the algorithmic range backwards. That's a way we cast the range backwards. Okay, looking at the last 20 days, 40 days and 60 days, but that is outside the scope of these videos. Okay, but I just want to share with us what I did. Okay, so I actually saw this. Okay, I saw this move. Okay, this was one price leg downwards, and none of this had happened. Okay, actually this had already happened by then when I came up, when I pulled up the chart during the London Q zone. Okay, which uh, you will actually see on the next chart. Okay, so when I put up my charts and when the London Q zone opened, okay, I saw this move. Okay, I was like, okay, we have this price leg, and so this was like a retracement for me. Okay, and price was currently above the midpoint. Okay, and it had already traded into a fair value gap. Okay, so I was like, okay, now remember we talked about price reaching for some level of premium and discount. Okay, so price moved from this level of discount to the premium spectrum. Okay, now we are expecting it to to reach back into the discount side of it. Okay, so okay, so that was the first thing I took note of when I put up my chart. Okay, although this move happened in my absence. Okay, but I was observer of it, and that is one thing you should put into consideration. Okay, when you are whenever you pull up your chart, at least you should take a look at the previous days and see if there is some kind of evidence, some kind of footprints that you can frame your setup around. Okay, it doesn't mean that trading this particular day you should completely ignore the previous days, because the interbank price delivery algorithm will seek for liquidity in the last 20 days, 40 days and 60 days. Okay, so but this is just 2 days back. Okay, this is just 2 days back. uh okay, so let's go down deeply into this. Okay, so now we can see from here, from this range high to this range low, price reached for those 15-minute fair value gap. Right now, price was, this was the old low that was created at the time I put up this chart. Okay, so I saw this and I saw this relatively equal lows. Right, so none of this had happened yet, none of this had actually happened yet. Okay, so I just put this for completeness sake, because this is a current price action. This is the current price action right now at the time of making this video. Okay, so but none of this had happened when I came up. Okay, so none of this had happened. So I was looking at, okay, this is the premium spectrum, okay, being reached for. So I was expecting price to actually reach down into this fair value gap, right, or this. Okay, so remember my bias is still bearish. Okay, so I was like, okay, price has already reached for this, and it should reach down into this fair value gap, and maybe into these old lows. Okay, so I was really expecting that huge move downwards. Okay, I was expecting that huge move. Okay, so now let's go down deeply into today's price action. Okay, so this is today's price action, and as you can see, the London Q zone actually opened right here. Okay, on this candle, if I'm not mistaken, it should be on this candle. Now, as you can see, the London Q zone opened here. So this was when I actually put up my chart on this candle right here. Okay, because I actually turn up my computer like 15 minutes to the London Q zone. Okay, so this was when I actually put up my chart and I was getting ready for the day's business. Now then I saw this is that 15-minute fair value gap from the previous 2 days. Okay, so that is the fair value gap right here. Okay, so I saw this move and I was like, okay, and I'm still very very much bearish. Okay, so I started calibrating my time of day and the opening price. As you can see, this is a 12 a.m. midnight. Okay, so this was certainly the old low that was created at the time I put up my chart. As you can see, these lows were created as well. Okay, so we had these equal lows and this old low right below the opening price. Okay, so now price is currently above the opening price, right? Remember, for our bearish days, our high probability setup is always above our opening price 12 a.m. midnight, right? So which is the first swing high prior to the London Q zone opening? Okay, so that is this is the first swing high, right? So I was looking for some kind of run, so I highlighted this and I was watching and hoping for some run above this old high, which is what we had here. Okay, so we had this move up here. Okay, when as you can see, price respected it, created some kind of short-term resistance, right, and traded through. So when this happened, this had not yet happened, right? So when I was on this, when this candle traded through, right, after it closed and went down to my lower time frame to to start looking for my shift in structure or evidence of this trend going lower. Okay, so now we have the different confluence I used in this. Is that the fact is that we have just traded off you know this premium fair value gap. Okay, we are just traded off and we are expecting price to reach for the opposing liquidity, right? So none of this has happened, right? And we are just here. Okay, we are just here and we have this old low in the discount sector. Okay, this is an old low, right? We have this fair value gap and this old low, so there are liquidity resting below these old lows, right? So I was really expecting price to go below this old low, reach for this fair value gap and probably these old lows, right? Okay, so that was what I was really expecting. And so now when this candle traded through, I waited for it to close. Okay, so once this candle closed, when it closed, that was when I went down to my lower time frame. Okay, so now as you can see, this is the 3-minute chart. This is a 3-minute chart. On a live trade, I don't normally go down. I don't normally scale down. I just go straight to the 1-minute chart. Okay, that's the one I use. But for completeness sake, I'm going to use two lower time frame. Okay, and I've already explained how you can make use of it. Okay, if you want to use the 3 minutes as your lower time frame, all you have to do is just to wait for the shift in structure on the 3 minutes. Okay, so which is what we have here. So we had this short-term resistance be created. Okay, so sellers came in here. Retail traders are going to see this as a resistance because this is actually a double top, right? So they are going to sell and have their stop loss above here. Okay, so smart money bought into that. Okay, so the sellers are going to be, their stop loss is going to act like buy sell liquidity, right? So now they are going to take the counterpart of the smart money order. So now we have this price traded through and I was waiting for my shift in market structure, which is actually what we have here, right? So this is the shift in market structure, and as you can see, it was very energetic, right? It's a huge displacement. It came down massively. Okay, so it didn't give me an opportunity for entry. So when it started retracing upwards, then I pulled out my my fib. As you can see, this is what I actually do when I have multiple uh fair value gap. As you can see, we have one here we have another one, and we have the third one. Okay, so how do I filter out my fair value gaps? I brought out my fib, and I'm only interested in the fair value gap above the the midpoint level of this range. Okay, that is if I'm looking for short. If I'm looking for longs, I'm interested only in the fair value gap below the 50%, the midpoint level, right? So this was what I didn't use this time frame from my entry, but I'm only using it uh on this tutorial, for on this lecture, for completeness sake. Okay, so this is where I got in. Okay, so mind you, I was having two fair value gap, right? So I was like, okay, the probability for it to reach, for price to reach for the second fair value gap is much. Okay, so my stop loss was above this third candles of the second fair value gap, right? So I had to give room just in case price want to reach for this fair value gap. Okay, and that is what you should do. I could have used this fair value gap for my entry, right? But most of the time you have to be sure to use this, the first fair value gap, because most of the time I've had a situation whereby my orders didn't get filled because I decided to use the second fair value gap, and price didn't reach for it, and it just took off. Okay, so you have to use the first fair value gap, and your limit orders to be above the first candle of the fair value gap. Okay, so this will be the first candle, this particular candle is the first, this is the second, and this is the third, right? So now my limit order was above this, not on the 3 minute time frame though, but on the 1 minute time frame. I will get to that in a short time. Okay, in a short while we are going to get down to the 1 minute time frame. Okay, so now this is where I got in, and my stop loss is above here. Okay, so now the other pattern I recognize that was created here is that the fact that we created a high, a low, a higher high, and a breakdown. Okay, so this would have been our shift in structure to the downside on the higher time frame, right? So this would have been our shift in that to our shift in structure to the downside on a higher time frame perspective. Okay, so same thing was created here. We have this high, this low, a higher high, and a shift in market structure. So that is why swing points are very important, and you have to train your eyes to be able to identify them. Okay, you have to train your eyes to be able to identify them. So once you see them, trust me, it will be hard to unsee it. Okay, so you have to train your eyes to be able to see this pattern be created. Okay, all right, so now going down further, you can see on, if I had taken my entry on the 3 minute chart, I would have had a 15 pip stop loss and a 22 pip TP. So you would have asked, why did I choose to use this as my first TP? Okay, because first we had equal lows right here, right? So we have equal lows, so the probability of price reaching for these lows were high. Okay, and going back further to this, you can see that this lows is the first discount level on below the 50% level, right? So this is the first place that liquidity will be resting. That liquidity is actually resting below the midpoint. Okay, so now this was the first place, so that's why my TP was here. This was my first TP, and my second TP was actually here. Okay, I was looking at price reaching for this old low. Okay, so now none of these, remember, none of these had happened then, none of this had happened. We are just coming up, and none of these had happened. Okay, so as you can see here right now, I had a 15 pip stop loss and a 22 pip TP, right? So now going down to the time frame, scaling this even lower than to the 1 minute time frame. Okay, so this is the 1 minute time frame. This is the time frame at which I executed this trade from. Okay, so you can see we had price creating a kind of resistance level here, and a smack through and shift in market structure. So we had our shift in market structure right here. Okay, so you can see the huge displacement created by price. Okay, so So this was a huge displacement. Okay, so taking out my fib as well, taking out my fib. Okay, this is the midpoint right about here. Okay, so this is where I got in. I was interested on this. Okay, so I had to look. This is the first fair value gap, as you can see, and we had a second fair value gap right here. So this one was enclosed, right? So I had to put my TP, my stop loss, above the third candles, right? So that reduced my stop loss right here. You can see this is 12 pip stop loss compared to this. Okay, reduced my pip by, I actually used a 12 pip on the 1 minute time frame, and a 15, and it would have been a 15 pip stop loss, assuming I had used the 3 minute time frame, right? So now my TP is remained this was my first TP. Okay, so as you can see, price played out well, and I took out 50% of my position right here. Okay, I took out 15% of my position, then I trade my stop loss. Okay, then something spectacular, something amazing happened. Okay, so now prior to the New York Q zone open, which is this is our New York Q zone open, right? On this candle, this is when the New York open. Okay, a low was taken out below the 12 a.m. opening price, and price shifted in market structure. Okay, so now we had this opening price right here. So remember, I got in somewhere around this area. Okay, so I got in somewhere around here, right? And I was aiming for this, and even aiming lower, right? So but I took out my first I took out 50% of my position, and I trade my stop loss. Okay, so now prior to the New York opening, okay, an old low was taken out. Okay, and price shift. This happened so quick, guys. This happened so quick. I didn't expect this. Okay, so it ended up taking me out at a break even. Okay, although most of my positions, I closed most of I closed 50% of it, trade my stop loss, and this took me out by surprise. Okay, I was like, okay, I was expecting price to retrace into this fair value gap and continue lower, but it created this. Okay, so now uh we had this old low right here. Price broke down, grabbed liquidity, and shifted in structures to the upside. Okay, when I saw this candle close, that was when I had to close my position. Okay, because I knew something was up. Okay, I became suspicious of the underlying trend, which is the bearish, right, changing when I saw this swing pattern formed, and I had already taken out 50% of my first position out with my stop trade to a break even. Okay, so now I was suspicious of this, because when in any situation you have something like this, okay, in any situation, in any given time, at any given time, if you have a situation like something like this, you should be suspicious of the underlying trend. Okay, the probability for that trend to continue is, is probably very probabilities are is very low. Okay, so I was suspicious when this candle closed above this old high. Okay, because I like watching my trade from different time frame. Okay, I can have the 1 minute time frame on one chart, the 15 minutes on the other, the 5 minutes, the 3 minutes. I just like watching it from different perspective. Okay, so when I saw this close on the 15-minute time frame, I was suspicious of this move. Okay, so I hesitated. I manually closed my position out. I manually took out my position. Okay, and I was watching price. Okay, I was watching price. Mind you, none of this had happened yet. Okay, so we had this whole move. Above this old high right here. So this is an old high, right? And price went up above the opening price again. Okay, so let's go down and see. So when price traded through this, let's go up once more. When price traded through this old high right here and closed, I was like, okay, my bias is still very much bearish, right? I have not changed my bias, and I'm still going to look for sell. Okay, so I'm still going to look for sell, because probably there were liquidity resting above this old high, right? And buy stops that, that were resting above this old high have been tapped in. Okay, so when this candle closed, I went to the lower time frame like I did earlier. Okay, like I did earlier. So this is that old high, so price went above it, and so price went above it, and you can see price created this huge displacement. I was like, okay, this is a huge movement, and I was like, since this trend, since this pattern is being created here, the possibility, probabilities for the underlying trend, which is bearish, to continue is very very lean. Okay, so I was looking at, maybe if this is going to be a retracement to continue higher, I will want to be in this retracement and exit at this fair value gap. Okay, so that was the mindset I had when I saw this. Okay, so this is a 5 minute chart, and when price started retracing, uh I was like, okay, I'm going to, try to get a sell entry above this old high, right? Because price has already traded into the liquidity resting above this old high. So I'm going to look for an entry and get out at this fair value gap. Okay, so which is what I actually did. Okay, now going down to the 1 minute time frame. This is the 1 minute time frame. This is that old high. Okay, this is that old high right here. Okay, so now price traded through, and I went down to the 1 minute time frame. Okay, as usual, and as you can see, there was no shift in structure. This was this swing low. Price went up, came down, created a new higher low, created a swing high, but refused to go above this old high, created another higher low. Okay, so price was creating higher lows but failing to create higher highs, right? So we had this shift in market structure, and price shifted in structure. So this was where I got in. Okay, so now I want you to pay attention to this whole move right here. Okay, so price created an old low. Okay, went up, so this is that low. Okay, price created an old low, went up, came down, created another, a higher low. Okay, then went up, failing to go above the previous low. So this was a failure swing. Okay, so this is a failure swing. Okay, so this was a failure swing and created the second pattern again. So we had this old low right here. Okay, price created a high, which is this high, created another higher low, okay, which is this low, and created a higher high, then broke down in structure. Okay, and then took out this short-term old low. Okay, shifted the market structure bearishly. So when I saw this, I was like, good, so this is my signal, this is my entry right here. Okay, so when this candle trade into this fair value gap, I add my entry right there, sniper entry. Okay, so that was the entry I took. Okay, now I took this entry with the 15-minute fair value gap in mind. Okay, so I aimed for the upper part of the 15-minute fair value gap that I showed us earlier, which is this. Okay, so this is actually the 5 minute fair value gap. This is because this pattern, that when in anytime you are in a trending market and you see this swing point being created, okay, the probabilities for the underlying trend to continue is very slim. Okay, so when I saw this move, I was like, okay, today might likely be a bullish days, because even in a bearish days there are going to be up days, right? So I was cautioned, and I was like, okay, today might likely be a bearish day, a bullish day, sorry. So I was like, let me get an entry and exit in the discount sector of this whole price leg. Okay, so which was actually what I did right here. Okay, so I got in right there with a 4 pip stop loss, and I aimed for 22 pip uh profit TP, which is a 4-to-1. Okay, 4-to-1 risk reward ratio. Okay, so and as you can see, so I got this and I got this second one, and I was done for the day. Okay, I was done for the day. So I got 25 pips on my first trade, 22 pips on the second setup, summing it up, that is 47 pips in total, and I was done for the day. Okay, I cared less about what is going to happen for the rest of the days. Okay, actually, I I left some position running. Okay, I took out about 90%. I left only 10% with a trade stop loss, because the probabilities for So I left 10% running because the probability for price to reach for this external range liquidity is high. Okay, so this might just be a fake move and a protraction, right? The move against against the overall trend. So this might just be a protraction to get retail traders chasing this upwards. Okay, so now price, taking a look at this at the time of making this video, you can see that we had equal lows right here. Price is being engineered, is engineering liquidity below this old low. Okay, let me move it up if I'm going to see a clear picture of it. Okay, so now at time of making this video, you can see that price in the afternoon session actually, so I'm no longer interested in trading for the day. So as you can see, price is engineering liquidity here. We have this old high, old low, sorry, we had a second touch and probably a third touch. So price is engineering liquidity. Okay, let me go up if I'm going to see a clearer picture, or there's no clearer picture of it. Okay, I should have taken a clear picture of it. But if you go to your chart right now, you're going to see that price is engineering liquidity by creating a clean low right here. Okay, so and that low is going to is going to get soaked underwater. Okay, it's going to get run into. Okay, so I was actually done for the day with the 47 pips and I'm out. So that is one of the ways. Okay, that is which is very important. You have to take what you have in the marketplace and leave for the day. Okay, you don't have to make 1,000 pips a day. You don't have to make uh you don't have to make 100 pips a day. You just have to make your goals to be realistic. Okay, because I was expecting huge move, but this is a very high manipulated market today. So the markets were being manipulated highly. So I was cautioned and I already had 47 pips in my bag. I wouldn't want to lose and give it back to the market. So I'm done for the day. I just closed and turned off my computer and I was done for the day. Okay, so which is actually something you have to learn. You have to learn how not to overtrade. Okay, because by so doing you might actually give back to the market what you have actually gained from it. Okay, so I had 47 pips, and if you take a close look, you can see that price trade after the New York lunch hour, it went below the old low, this old low, to reach for liquidity. Okay, but none I cared less about the what happened after this. Okay, so I was done for the day and I'm out. Okay, so that, guys, this is the live trade experience I had today, and I'm hoping I'm going to share with us tomorrow's own and the day after that. And from now is what I'm going to be making a video on live trade experience. Okay, so I'm going to be sharing with us what I experienced, because there's a saying that goes like experience is the best teacher. Okay, so one thing is to learn smart money concept, the other is for you to put in the work. You have to get to experience it yourself, because that way is you are going to learn faster. Okay, so that was how I learned it, and I'm still learning, and I hope every one of us take out the time, put in the work, and at the day end is going to actually pay off. Okay, so that's just all on this video. Thank you guys for joining us, and if you have any requests, any comment, please do well to leave a comment on this video. If you enjoyed this video, give this video a thumb up and share it with friends. Okay, see you guys tomorrow, and have a good trading week.